ready? You got me running, you got me running, got me running. Shake it, shake it, shake it, baby. Raise your hands up, raise them out.
All right, everyone. It is Monday, the 24th of January, a new week in the markets as well. I put out a smiley face in chat there just to bring some positivity. Markets sort of struggling a little bit so far today in regards to risk sentiment, but there's plenty to talk about as well today on the currency call. And welcome to all the members catching the call live within the LCMS Traders Club. If you're looking to get into the club as well, get the key market updates when things happen. Pretty much the room is nearly 24 hours, 7 days a week as well in regards to crypto, Forex, stocks. So definitely subscribe to the LCMS Traders Club. Visit the Jindal Thai website to do so. Just before we get into it, a quick introduction as well. The currency call is from 11 a.m. GMT +8 every Monday to Friday. Today and Monday, we'll be looking at the Aussie and Kiwi. Tomorrow, Euro. Wednesdays, the pound. Thursdays, yen and gold. And then Fridays, we've got the CAD, oil, and we've also got cryptocurrency too. And crypto was a little bit wild over the weekend. So definitely a little bit to talk about in the week on crypto as well. But before we get into the call as well, just a risk disclaimer, given that we do talk about potential trade ideas. So please just focus on this whilst I read it out, that any information shared in this video is not intended to be a trade recommendation. It is solely the opinion and views of the speakers. So please remember to do your own analysis prior to entering any trades. So just to kick things off, I will be touching upon what the US dollar index is doing today, and also just going through a little bit of the news from Friday, and also to start the week off with as well. So I'll just bring up the chart here. It's, somewhat range bound still. So on the daily time frame, it is trading above the 95.50 support level. We have seen it recently sell off, but the risk sentiment has returned back to risk off as well, just with what we have been seeing with the bond yields. And Gimmy and I were talking about that as well. They did inch lower on the 10-year and the 2-year on Friday at near the close. So the 2 years back below 1% and the 10-year is back below 1.8%, but the trend is well and truly an uptrend. So you've got to be careful with that and monitor that. So for later today with the US session opening in the evening in our time zone here in GMT +8, it's interesting to see if it does continue to move lower. We did have in the Australian session and Asian session so far, it's been down a little, but we did bounce, but still negative on the day so far. But really what I'd like to see is if we go to a lower time frame on the 1 hour for the index, you can see it has been pretty uninteresting. We've interacted with 95.50 several times as well in recent days. And again, we'll just have to wait and see. We've got recent highs at 95.85. So we're down at 70, 95.70. So we're about halfway in between the two levels, a little bit higher to 95.85. But just looking at the news now from a catalyst standpoint, and I'll just share this now. So with the news that has been released, there wasn't really a lot on Friday. What was really driving things, and Gimme and I were talking about this, is the situation. Now, this was more developing over the weekend with the fact that the US government announced that they were ordering US diplomats, family members, and staff that are in Ukraine for government work in regards to embassies and the like to return to the US, or essentially to leave Ukraine. Because there is chatter that Joe Biden is looking into potentially sending troops to Belarus, I believe, just to help try and stabilize the situation, because Russia has a lot of troops near the border of Ukraine as well. So it's creating a lot of fear and uncertainty and doubt, which abbreviated is FUD. And we've just, seen that in markets. The rallies have been not really there. We do have the Aussie and the Kiwi to discuss today, which are very risk-sensitive currencies as well. So it's going to be interesting to see what they've been doing today as well. But for Monday, for today, in regards to US news, as you can see, there's not really a lot of high impact. We do have the flash manufacturing PMIs and flash service PMIs, and they're expected to be a little bit weaker as well than the previous read. So something to look out for there, but really later in the week, and we're going to be discussing this as well, obviously in the lead up, is the FOMC statement and the federal federal funds rate too. So that's Thursday morning at 3 a.m. GMT +8. So really that's something to look forward to for a really strong catalyst, just to see what is mentioned with the Federal Reserve and how things are going to be managed with what we've been seeing with increased inflation. And also the bond yield is increasing higher as well over the past month or so. But for the US dollar, frankly, today could be, a day where it just eases back down to 50. So if you're into playing those tight ranges, that's what I'd be looking for. Not really playing the breakout over 95, 85, just simply because there's a lack of catalyst for that, as well, especially if we see today in the Asian session and European session, if we see markets not do too badly, then you'd have to say, okay, the whole situation is somewhat under control for now, but we have to wait for that US session to lead the way. So those are my thoughts there on the US index. Not particularly eventful for today, but just wait and see what happens at 95.50 if it does pull back, which would be more ideal than buying the breakout. But we do have the Aussie and the Kiwi in focus now with Kim Hong, currency strategist at LCMS Traders. So I'll pass it over to you now, Gimme.
All right, thank you, Scott. Happy Monday, everyone. Not an eventful day. Yep, I totally agree. I'm going to start off with the economic calendar just to see what we have in store for us, well, for the Aussie, Kiwi, and US dollar. Okay, so today, earlier on today at 6 GMT +8, the Australian flash PMI data was being released. Okay, flash manufacturing PMI slowed down slightly. Okay, it's still in expansion nonetheless. All right. However, okay, this is what we would like to pay attention to. Flash services PMI, okay, actually went down to the contractionary level. All right, meaning in January, okay, this month, it is expected that the services sector actually contracted. All right. Reason behind this is, as you guys probably would have already known, okay, it's the Omicron issue and things like that. All right. So I think like countries around the world were not spared by this whole highly contagious Omicron variant. Okay. So I believe that's one of the main reasons why we are seeing a slowdown, okay, in business activities, especially in the services sector. All right. And then later on tonight at 2245 GMT +8, we'll be seeing we'll be receiving the data release from the US flash PMI data. Okay. Yeah, like what Scott mentioned, it's expected to slow down slightly. Okay, but personally, I feel that this is not going to be too big of an impact. It's not going to cause too big of an impact on the US dollar. Okay, knowing that there's so much happening right now. Okay, we have the Ukraine-Russia issue, and then we have Omicron issue, and then I just read an article earlier today on the US-Iran 2015 nuclear talk. Okay, and they were actually saying something like it's unlikely going to, US is unlikely going to lift the sanction off Iran. Okay, unless they actually release, some of the US prisoners and things like that. So it's still, I would say, tension here and there. Okay, so economic data like what do you call it, PMI data and GDP and things like that may actually take a bit of a back seat for now. Okay, especially this Thursday we'll be hearing from the FOMC. Okay, that's probably the most important economic news event to pay attention to this week. All right, and then moving on to Tuesday, we see the Australian quarterly CPI data release. Okay, this may actually cause a bit of an impact on the Australian dollar, all right? Especially, okay, they are actually expecting inflation to rise, okay, on a quarterly basis from the previous data release of 0.8% to 1.0%. Now, in recent releases of inflation data, okay, we realized that, the actual release, which if it turns out to be higher than previous or expected, okay, implying that inflation has risen, okay, recently, the impact is usually a weakening in the currency, okay? So if the data were to turn out to be 1.0 or maybe even slightly higher than 1.0, okay, as long as it's higher than the previous 0.8, okay, we may actually be seeing a bit of a weakening in the Australian dollar, okay, which I will cover the trade idea later on to see what can we do on, Aussie dollar for today at least, okay, or in the short run, all right? And then moving forward, we see on Wednesday, okay, there's Australian bank holiday in observance of Australia Day, okay? So liquidity and trading volume during the usual Australian market session is likely going to be lower, all right? So just pay attention to it. Nonetheless, the Japanese market is still on, the New Zealand market is still on, basically the Asian market is still on, all right? And then we have new home sales data on Wednesday, okay, 2300 GMT plus 8. To be honest, yeah, with the FOMC just 4 or 5 hours before, it's unlikely going to cause any impact on the US dollar for now, all right? Then comes the FOMC, okay? I will break it down on what to pay attention to for this meeting on Thursday, okay? Oh, I will be breaking it down on Tuesday's currency call, okay? But Traders Club members, okay, I will be breaking it down tonight during the call at 2000 GMT plus 8, okay? So if you guys, want an earlier prep, just join the call tonight at 8 p.m. and then I'll, talk about it during the economic calendar section, okay? And then probably like some 12 or 15 or 16 hours later from FOMC, okay, we see the US advanced GDP quarter data. Now, this advanced GDP data is actually the first release of the quarterly or US quarterly GDP data releases, okay, because it comes in 3 versions: advanced, preliminary, and final. Okay, advanced being the most impactful one, all right, and then followed by preliminary, and then followed by final. Okay, personally, I feel like the final version is just the confirmation version. Okay, so if it's like 5.3, the final is usually expected to be 5.3, like little change. Okay, and even if there's any changes, it's likely going to be just like a small change, small deviation. Okay, if it's going to be like big, huge if there's going to be like some big deviation from the preliminary release, okay, then likely we're going to see move in the US dollar. But that's not the case for most of the time, at least for the past few years. Okay, so advanced GDP, something that I'll be paying attention to as well. Okay, is expected to rise. Okay, for the quarter of, let me see, I believe this is for the fourth quarter of 2021. Okay, then we have core durable goods unlikely going to move US dollar, okay, especially after the FOMC. And then on Friday, we have the core PCE price index release. Okay, remember, this is the Federal Reserve's preferred economic indicator to measure inflation. Okay, so we still have to pay attention to it, although it's expected to remain unchanged, okay, from the previous data release. Okay, and then on the following Monday, next Monday, this is Chicago PMI. I won't at the moment, I won't be paying much attention to it. Okay, it's basically just the measurement of the business activities, okay, of how business activities are going on in Chicago State, okay, in America. All right, so that's pretty much it for the economic calendar 1 week down from today. Okay, then let's head over to the charts. Let's start off with Australian dollar. Okay, on the daily time frame, we see that last Friday, okay, yeah, there was a strong sell-off in the US equities market. All right, so that probably led to an increase in demand of the US dollar, and of course, there's a strong risk off as well, as mentioned by Scott just now, right? Because of all these political uncertainty, political turmoil, political tensions going on around the world, Hence, when it's risk off, market participants in the currency market, tends to go to the US dollar, US dollar, Switzerland francs, and the Japanese yen, So, likely the case. And then Aussie dollar actually traded towards the my support of 0.716, all right? And then at the moment, I would say it's a bit slow right now, if you were to go over to the H4 time frame, 240, we can see that, it's, I would say for the past 4 hours or so, since market open, it's trying to bounce off the support zone, support region, but personally I feel like we probably have to wait for at least the earliest we have to wait for the European market open, all right, before we can have I would say a more reliable confirmation on whether Aussie dollar is making a comeback, otherwise, at the moment, I'm personally not looking to buy Aussie dollar, so I'm only looking for selling opportunities. But then you might be wondering, with this support so near, how are you going to sell, right? Yes, unfortunately, we will have to wait for a break below the support zone, and my entry level would be at 0.713, which is around here, Oh, purple this time around, great. Yep, 0.13 would be my sell entry level, and then my stop loss would be placed at 0.718 above this resistance bar. By then it will become a resistance, of 0.716. So my stop loss would be 50 pips, and then my potential take profit would be just above the next support zone, at the level 0.703 around here, which is 100 pips. So the risk reward wise is 1:2, but with all these happenings around the world, FOMC on Thursday, the thing I realized about FOMC, is that during FOMC week, there tends to be thinner liquidity, thinner trading liquidity and volume, all right, because everyone's just waiting for what? Waiting for the Federal Reserve to announce anything major, normally, if let's say the market is not expecting anything from the Federal Reserve, then maybe they are unlikely going to wait. They're just going to trade as normal, But this time around, we can actually expect updates from the Federal Reserve, So the market may actually slow down a bit on Monday, Tuesday, and Wednesday, until the announcement is made on Thursday. All right. So with that being said, I would not suggest holding your profits, holding your trades all the way until it hits the take profit level. So in the scenario whereby this trade is being triggered, just pay attention to it. Especially I'll be paying particular attention to this red line over here, 0.71. All right. It may break the support of 716, and then probably just hover around 0.71 key level, all right, and then probably wait for the FOMC before deciding if it should break below this key level. Otherwise there may actually be a rebound upwards, from the 0.71 level. So short term is the key over here, all right. And yeah, for Traders Club members, tonight during the call, I will also be looking for trading shorter term trading opportunities on the H1 time frame. So that may actually come in more useful, I would say, in terms of trading for this week. With all this political stuff going on around the world and a couple of red news on the economic calendar. So that's for the Australian dollar. Now, heading over to the New Zealand dollar, on a daily time frame, we are seeing that, the New Zealand dollar is currently testing my support zone of 0.674, Okay. Similarly, I will only be looking for selling opportunities. Okay. This level is going to be, I would say, easier. Okay, it will be easier. You will be able to hit this level faster than expected. Okay, so this level, okay, the sell entry level will be at 0.668. Okay, which is around here, right after it actually breaks below the 0.67 key level. All right, then once it moves below it by 20 pips, okay, then yeah, I will look for selling opportunities. Okay, and then my stop loss would be at 0.676, which is around here, okay, above the resistance zone, okay, at that time. Then my potential take profit level would be at 0.656, okay, which is around here, just above the support, the next support of 0.654. Okay, so stop loss 80 pips, take profit 120 pips. Okay, risk reward of 1:1.5. Same thing. Okay, I'm not going to wait for the TP to hit. All right. Comparing the Aussie dollar trade idea with the New Zealand dollar trade idea, personally, I would prefer to go for. I feel that the New Zealand dollar trade idea is probably more promising, okay, than the Australian dollar trade idea. All right. One reason is because, okay, we are closer to the entry level. Okay, the chance of it hitting and moving lower is higher. Okay, because if you were to look at the Australian dollar, okay, moving back to the Aussie dollar chart, we see that at the moment it's trading at 0.718. Okay, and for it to trigger the entry level of 0.713, okay, just a quick computation, is probably like some 50 pips from the current price. Okay, and then of course 50 pips for it to trigger the entry. Okay, and then for it to make some profit, it has to move further down. All right, probably like 70 or 80 pips from the current level before you can make some 20 or 30 pips of profit, as opposed to the New Zealand dollar, okay, which is get the chart up, which is currently trading at 0.672, okay, 6723, and then the next the next entry level, which is some 40 pips away from now, okay, which is, I would say, closer, okay, than the Australian dollars entry level. So one thing is more promising, okay, and at the same time, another thing is that it's already testing the support, okay, for the New Zealand dollar at the moment, whereas for the Australian dollar, it's actually, well, trying to bounce off the support, okay. So yeah, New Zealand dollar will probably be more promising, and then if you look at the H4 time frame, at the moment, it's probably like just consolidating and things like that. Okay, so any questions on the trade idea or any political questions? Oh, not political questions, but anything related, questions related to any political turmoil. Okay, no questions. All right. So Traders Club members, okay, remember that there's a call tonight at 2000 GMT plus 8. Okay, if there's no questions for now, I will see you guys later tonight. All right, and then I'll hand it over to Scott.
All right, thanks, Dimmy. And I've just shared the trade ideas as well, but just remember to take note about the holding times as well, just with what we are seeing with the global uncertainty. So please be cautious. And again, feel free to ask questions as well within the Traders Club, and hope to see everyone this evening, 8 p.m. GMT plus 8. And have a great rest of your day, guys. Thanks for joining us for the currency call today. Bye for now.